Welcome to FinLogic's investment tips. One of the most important factors to consider when investing is the risk involved in your investments. Risk versus reward always is a topical issue. For example, if you've got a higher reward or investment return on a fund, the higher the risk. Risk, fortunately, can be managed in various different ways. First of all, by increasing the investment term that you're investing in, you effectively are balancing out the risk and the volatility on an investment fund. Diversification is always an important part of investing. By using various asset classes, such as equities, property, bonds, and cash, it helps to minimize the risk on your investments. By utilizing an investment house that has got a good known track record, also will allow you protection through the FSB or Financial Services Board. By utilizing various investment vehicles, you can take advantage of the tax deductions and tax exemptions that are available to you. First of all, if you have a look at collective investment plans, such as unit trusts or ETF funds, as was mentioned earlier, these funds effectively have tax in your own name. But what you can do is, by utilizing the interest and the capital gains tax exemptions, you can maximize your investments. Secondly, by looking at endowment plans, it is a longer-term investment. However, the proceeds are tax-free. And lastly is always to look at retirement annuities. Bear in mind, you're getting a tax deduction on your premium if it is structured correctly. To maximize your investment, you need to be in the market for a long period of time. The rule of 72 is an easy way for you to calculate how long it will take to double your money. For example, if you wanted to see on an 8% return, 72 divided by 8 will equal 9, which means it takes 9 years to double your money at an 8% return. Real return is always very important. You might be getting a fantastic return, but inflation eats away at those returns. So make sure that you're getting an investment return that is always outperforming inflation. Costs need to be taken into consideration. There's a whole range of various costs depending if you're investing in various different types of collective investments, endowment plans, or retirement annuity plans. These plans, for example, have initial fees, management fees, administration fees. There's a whole lot of factors to be considered when investing. By contacting a financial advisor through FinLogic, we have a look at various different options to make sure that the investment will work correctly for you. First of all, we look at your risk profile, which is your appetite for investments and risk of investments. Your age is always an important part. The reason that you're investing is always taken into consideration. Term of investment is always an important part because you need to understand how long you have to be invested to get the best returns. Your marginal tax rate also becomes an important factor. Depending on your marginal tax rate, the various types of vehicles being used obviously can differ. Always utilize those available tax exemptions and deductions. Your current investment portfolio is an important thing to look at as well. By taking everything into consideration, we can give you the right advice.